Hi there, welcome to GrainTV. It's Wednesday, April 20th. Yet again, a big day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn joining the party, gaining 10 1/4 a bushel, getting almost up to that $4 mark on old crop corn, and $4 was certainly cleared today in new crop beef delivery. Soybeans also clearing a marquee mark, hitting $10 a bushel. Well above that in the case of July and August, gaining 24 cents a bushel, and Chicago wheat continuing to advance, gaining 18 cents a bushel. Today was one of those days where you just sort of looked at your screen and said, what the heck is going on? I don't know where to point my finger at what causes us to have a 30-cent up day for several days in a row. There are certainly minor stories that we can say are supportive. Argentina's crop having problems with the late season flooding, Brazil being hot and dry on their second season corn. But overall, things are not dramatically different now compared to where we were a month ago, but certainly the price environment is dramatically different. This morning we did have corn exports yet again get announced by USDA, 136,000 metric tons to old crop. That was on top of last Tuesday's announcement as well. So there are things that, yes, you can say these are supportive, but are they causing the big cataclysmic rise that we're seeing in grains? I just don't think it's something that's going to be able to sustain itself. But that doesn't say that this market won't keep going higher. Clearly, this is a market that is really determined to move higher and shake out these weak shorts, and we're seeing that today. In terms of ethanol, we did have a pretty mild week for ethanol. We were off last week by a substantial margin, 38,000 barrels per day. This week we bounced back only 1,000 barrels a day. We did drain stocks by 271,000, but overall that was not terribly supportive. EIA's crude oil number was somewhat interesting because yesterday on Tuesday, API's crude oil number was higher than expected. This morning's EIA official government crude oil number was actually lower than expected, so that got the crude oil market up quite sharply and touching on fresh highs. So that was certainly supportive for beans. Let's take a look at beans, and in particular what was interesting today, not just the magnitude of the price rally, but the fact that we are actually seeing spreads from old crop to new crop beans really start to get active. We saw a 20-cent gain in old crop over new crop. So new crop beans were not up that sharply, only up 3 cents on the day. Meanwhile, front month May was up 24 cents. So we have spreads getting more premium for old crop delivery than new crop for the first time for a foreseeable long-term time period. Now let's take a look at May beans, because this is a market today, just like we talked about yesterday, where we see this sort of freight train mentality that we are in a clear directional trade. Anything that is sold off is very quick to be bought up, and you can see that here in the 5-minute bar chart from our Grain Hedge trading platform, looking at the day session. And you can see out of the chute we did have about three 5-minute periods or 15 minutes together where we did have some down action, but after that you can see very little red. That is, the red is when we sell off and the green is where we buy up, and you can see that the reds were substantially outnumbered compared to the green. It was just a day of straight uphill all day long. That to me is an indication that this is a market that's short covering, that we are seeing people get out of positions because of the margin calls and the sort of frantic movement we have had. So where does this market play out? I don't know, but certainly if you're a producer, this is a gift. Look at it as a gift. $4 new crop corn, $10 new crop beans. 1 month ago, we'd have been called crazy for saying this was going to happen, but it's here before us now. And I would suggest farmers start taking advantage of this, because all fundamentals suggest we are not dramatically different than where we were a month ago. We still have plenty of old crop supplies. We still have good harvest weather coming to the U.S. And so good planting weather coming to the U.S. So I think this is a prime opportunity to start taking advantage of some of these prices. If you want some help in your own marketing situation, we're talking to clients about things like short-dated options right now, because they're less expensive than going all the way out to the traditional October the traditional November or December contracts for corn and beans, you can actually get a much shorter dated option that is less expensive but still gives you price protection into the summer. So if you have questions about those kind of trading ideas, by all means, give us a call, 877-472-4607, or as always, visit us online at grainhedge.com. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at GrainHedge.com to become a client.